Welcome to this deep dive into the investment philosophies of one of the most legendary figures in the world of finance, Peter Lynch. Known for his exceptional track record managing the Fidelity Magellan Fund, Lynch's principles have guided countless investors towards success. In this video, we'll explore Lynch's timeless investment insights, his practical approach to stock selection, and how anyone can implement these strategies to achieve financial success. Whether you're new to investing or a seasoned trader, Lynch's wisdom is invaluable for building a solid foundation in the stock market.
Insights for the informed investor.
Peter Lynch, an icon of the financial world and one of the most successful fund managers of all time, is known for his remarkable achievements managing the Fidelity Magellan Fund. Under his leadership, the fund grew in just 13 years from a relatively small investment fund to one of the largest and most successful in the world. His impressive returns and easy-to-understand investment philosophies have made Lynch an inspiration to millions of investors worldwide. With a clear, pragmatic approach, he demonstrates that even individual investors can be successful in the stock market, without special training or expensive financial advisors. His message is clear. Anyone can make smart investments if they are willing to show patience, conduct thorough research, and keep a cool head during turbulent times. The philosophy of long-term investing. Peter Lynch emphasizes that the key factor for long-term success in the stock market is not about finding the perfect time to buy or sell, known as market timing. Instead, success lies in identifying high-quality companies and holding them for the long term. Lynch makes it clear that investing is not a science that only experts can understand. Rather, it is a craft that can be learned with simple principles and common sense. During his time as the manager of the Fidelity Magellan Fund, Lynch demonstrated that the secret to success is not luck, but the systematic selection of companies with solid economic foundations and long-term growth potential. He emphasizes that investing is more about knowledge and preparation. Those who research well and understand the companies they invest in have a better chance of long-term success compared to those who merely chase short-term trends. Long-term perspective and the magic of compounding. One of the central points in Lynch's investment strategy is the importance of a long-term perspective. He describes the power of compounding as a powerful tool that leads to exponential growth of one's wealth over time. This is the effect where returns from investments are reinvested, generating additional returns, thereby accelerating the growth of capital. Lynch illustrates this with a simple example. A 20-year-old investor who invests $100 monthly at an average annual return of 10% can accumulate more than $1 million by the age of 60. A 35-year-old, on the other hand, would need to invest $400 monthly to reach the same amount by the same age. This example vividly shows how important it is to start investing early and think long-term. Even small amounts invested consistently can build significant wealth over decades through the power of compounding. Staying calm. During market volatility, Lynch highlights that market fluctuations and setbacks are inevitable in the stock market. Investors must learn to endure these fluctuations without panicking or making hasty decisions. It is normal for stock prices to rise and fall, and this volatility should not deter investors from investing. During Lynch's time as a fund manager, the market experienced numerous downturns, during which the stock market fell by 10% or more multiple times. Nevertheless, the Fidelity Magellan Fund achieved extraordinary returns during this period. Lynch points out that attempting to time the market, i.e., perfectly predicting entry and exit points, usually fails and leads to losses. Instead, investors should focus on long-term growth and demonstrate patience. Stocks are not suitable for short-term goals, but an investment horizon of at least 10, 20, or more years offers solid chances of success. Using one's own environment as a source for investment ideas. Another core principle of Peter Lynch is using one's personal experience as a source for investment ideas. Lynch encourages investors to observe their surroundings closely and look for opportunities. Products that one appreciates or companies that stand out positively in everyday life can be good investment opportunities. Lynch tells the story of a firefighter from New England who noticed that a local company, Tampax, was steadily expanding and hiring new workers. He began investing regularly in the company and became a millionaire within 20 years. Lynch explains that it is often the small observations in everyday life that lead to great investment opportunities. His own experience with buying a Volvo family car is another example of how personal experiences can lead to lucrative investments. He was impressed by the car and decided to investigate Volvo's stock more closely. He found that the stock was trading at a very low price, nearly equal to the company's cash reserves, and decided to invest. Selecting the right stocks. Lynch categorizes stocks into 5 types, each offering different opportunities and risks. Fast-growing companies, firms with high growth potential, often operating in new or expanding markets. These companies offer high returns, but are also riskier. Slow-growing companies, established firms with stable business models that offer lower but safer returns. These stocks are less volatile and provide a certain level of stability. Cyclical companies, companies whose profits are heavily dependent on the economic cycle. During times of economic expansion, these stocks offer high returns, while they often suffer losses during downturns. Asset plays, companies with valuable tangible assets or large cash reserves. These firms are often safer as they have reserves to protect themselves in times of trouble. Turnaround companies, firms currently facing difficulties but have the potential to recover. Such companies offer great opportunities, but investors must ensure these firms have sufficient capital and clear strategies to improve their situation. A clear story about the company, understanding its products, market opportunities, competitive advantages, and growth strategies is, for Lynch, the foundation of every successful investment decision. Metrics and dividends as decision-making tools. Peter Lynch emphasizes the importance of metrics, such as the price-to-earnings ratio, PE ratio. This metric indicates how much investors are willing to pay for each dollar of a company's earnings. A low PE ratio can indicate that a company is undervalued, while a high PE ratio might suggest that a stock is overvalued. However, it is crucial to always consider the PE ratio in relation to the company's growth potential. Dividends are also important, especially for slow-growing companies. Dividends are a sign of a company's financial stability and provide investors with long-term steady returns. Companies that increase their dividends annually signal strong financial foundations and consistent growth. Summary: anyone can invest successfully. For Peter Lynch, investing is neither a matter of luck nor a mysterious secret accessible only to a select few. It requires thorough analysis, patience, and a long-term perspective. Even those who have little time to delve into individual companies can benefit from mutual funds, which offer diversification and are professionally managed. Lynch's key message is, use your experiences and knowledge from everyday life. Observe what is happening around you and identify companies with real potential. With patience, discipline, and a clear focus on what matters, any investor can succeed in the stock market, regardless of their previous experience. Lynch inspires people to believe in themselves and in the opportunities presented by their own observations. He shows that with the right mindset, a well-founded approach, and the willingness to stay calm even in turbulent times, long-term success in the stock market is achievable for everyone. Thank you for joining us on this exploration of Peter Lynch's investment principles. His insights remind us that investing doesn't have to be overly complicated, and anyone can achieve success with the right approach. Remember to start early, stay informed, and use your everyday observations as a guide to finding great investment opportunities. Whether you're just beginning your investment journey or looking to refine your strategies, Lynch's timeless wisdom serves as a powerful foundation. Keep learning, stay patient, and invest wisely. If you found this content helpful, be sure to like, share, and subscribe for more insights into successful investing.